Welcome to Loup TV. I'm Gene along with Doug, and this is Wednesday, January 12th. Our topics today, we're going to hit the inflation number really quick and then vector safely into our violent concerto, which is tech. I'll talk about Coinbase, an acquisition they made, Facebook, continuing to navigate those pesky regulators. And lastly, Apple potentially could be getting into some live sports content. I don't know what you call the sub-A topic, Doug, but before we get into the meat of the tech, it is worth mentioning that the inflation numbers for December came out as expected, up 7%. That compares to up 6.8% in November and I think 6.2 or 3% back in October. It's been going up. Many headlines reference this is the highest inflation since like 1982. If you go back to 1980, it was like 15%, and then it started to work itself down. And so you'll continue to hear these numbers referencing 20, 30, 40 years ago. But what's important, market was basically sideways on it. Whenever you talk about inflation, the Fed, big tech and small tech, growth tech always comes into the conversation. And so I think it's valuable just to hear our view when we see these numbers and think about this upcoming Fed meeting. And to bring in Doug here, were you anxiously awaiting for the inflation number this morning? Were you hitting refresh on that .gov site?
No, I wasn't hitting refresh. I did pay attention to the number, but I mean, for us, and I think this is the same thing for any investor, even if you're not a tech-focused investor, is you just focus on value. I mean, this conversation is going to continue for the next several months, if not the next year plus, as we talk about things even beyond the Fed funds rate, including sort of the unwinding of the balance sheet, which may even be a bigger deal. So for us, I mean, I think it's all about just, looking at companies. We talked about this a little bit yesterday, but think of a price as this sort of demand for some minimum level of future performance. And if you see a price that has a demand that you think is reasonable, and even better, if you think the company can beat that demand, well, then that's a sane bet. That's a sane investment to make. And we can get into betting and investing in another time, what terminology we use. But I think that's what you really need to look for. And, don't drive yourself too crazy trying to predict inflation and interest rates.
It's a relieving perspective. Even with that, I'm still going to pay close attention to all the things going on that level and pay even more attention to transformational, what's happening around transformational tech. And we'll start with Coinbase on that front. Big acquisition or small acquisition, but it really caught my attention. And tell us a little bit more.
Coinbase is buying FairX, which is a regulated derivatives exchange. So they have essentially a crypto derivatives product. And the goal for Coinbase.
Let me just stop for a second. I mean, just that phrase, crypto derivatives, it feels like taking a shot of like adrenaline and putting it into Red Bull and then spiking it with some high-powered liquor. Is that sounds like a dangerous activity to participate in?
Well, I think that's probably true anytime you hear the word derivatives in general, but I guess when you associate with crypto, I understand the reaction. But I think that's kind of the point of derivatives is, it's a maybe more distilled, pure form of trying to get at, the motion of an asset price. And so, FairX, they have this product. Coinbase right now doesn't offer, things like Bitcoin futures to its very many customers. It's something that customers have asked Coinbase for. They've talked about it before. And here's something that's also interesting. And I think this is true anytime you're kind of comparing, derivatives with spot markets. But the derivatives market in terms of volume in December, if you just look at December, is about 2x bigger for crypto derivatives than it was for crypto spot. So think about that as, things like Bitcoin futures contracts, 2x more volume is traded for those versus Bitcoin
the actual
itself.
Underlying Bitcoin, which probably
That's
says
right.
something
So it's a
about
big
the
market.
people who are participating in Bitcoin trading right now is they've got they kind of are these people who are really looking for that outperformance.
That's right. And I mean, there's institutions there. Obviously, I think a lot of crypto futures right now are more institutionally focused. And of course, Coinbase will offer those services to their institutional customers.
You think on derivative trading, you think they're more, if you're going to guess, more institutional versus retail?
I think right now, probably it's more institutional than retail just for the access of it. But one thing that Coinbase said in their blog announcing the acquisition was that they want to bring these products to their retail customers in sort of an easy to understand and easy to use way. So it is something that they're intending to bring to their entire customer base.
And the valuation, what did they pay for it?
Undisclosed. If I had to guess, it was probably, maybe around 100 million or less. Rough ballpark guess, so I could be way off.
So this is, I mean, they're basically acquiring a feature here.
I think it's, I wouldn't say just a feature. It reminds me in some cases of, Apple's strategy in the past to buy what may seem like a feature, something like Authentic, which was became eventually the fingerprint reader on devices before we moved to the facial recognition product. But I think this is something that Coinbase can take. They can build into their core product. They can let their entire user base access it. And I think in that sense, it's probably more than just a simple feature for them. I think it's a real meaningful potential product.
And we are investors in Coinbase at Loup, just based on a belief that this asset class is really important. It's hard to predict it, hard to identify and really put a lot of weight behind a specific currency. It's easier to bet on a platform, to invest in a platform. And so that's how we get to Coinbase. Anything more on Coinbase before we move on?
Just build quickly on what you just said. We've thought of Coinbase as the bank of the metaverse. They're coming out with an NFT platform in probably the next couple of months, which we think is a big deal for Coinbase. We've been very bullish on NFTs. We talked about OpenSea last week, a $13 billion valuation in their most recent round. Coinbase has a lot of customers. It's a big market for them to enter. So is the derivatives piece. I think that they're kind of firing on all cylinders, building out all the pieces they need to be to really be that bank of the metaverse.
And they're kind of in the 50 or $55 billion market cap range right now.
A little high. I think they're about 70. I'd have to look at the most recent price though.
Got it. Let's move on to Facebook. As a reminder, Doug's going to call Facebook until they sell 200 million head-mounted devices. Yeah, I'm going to call it Facebook until the stock starts trading under the ticker Meta, or whatever the ticker is going to be for Meta. And the news is that it sounds like that they're starting to wrangle again with some regulators, talking about breaking up the company, breaking up Instagram and WhatsApp, and saying that this is kind of some unfair advantage. It's all the same kind of rehash of what we have heard for the last, I guess, few years. And kind of Facebook once again finds itself in a little bit of some headline mess here. But like in some ways, this is kind of backwards that we're talking about this again. Shouldn't have this been resolved a long time ago?
It feels like it. I think it's funny. We actually look back literally on the FTC website right now. You can look at a post from August, got it up on my screen, 22nd, 2012, which was the FTC saying that they had finished their internal investigation of the Instagram acquisition at that time. They had no objections, and they said that Facebook could move forward with the transaction. And so what it feels like to me when you see, the history of this, the history that they have with the FTC, is that Facebook made an acquisition. It turned out to be one of the best probably M&A transactions in the history of M&A, given the outcome. And, now the FTC is saying, hey, this is anti-competitive. Someone on the other side might argue that, well, now we have access to some of Mark Zuckerberg's emails, and in his emails, he talks about Instagram being a dangerous competitor. But that's why people buy competitors. I mean, we shouldn't act like that's a crazy thing for someone to say. Of course, you want to acquire a competitor if you think that they're a threat to you. But the thing is, when it works out in such a big way, I think it then becomes a problem down the road, and that's kind of what we're dealing with now.
It seems like the analogy that came to my mind would be driving in a 30-mile-an-hour zone, and then later they change that speed limit to 15 miles an hour and then find you and somehow retroactively give you a speeding ticket. It just seems like absurdity at a certain level. Am I missing anything? Is it just the fact it is absurd, but it makes sense because it's such a big win that politically it makes sense for someone to try to take a stab?
But and I think it's also that just the government is looking for reasons to challenge these big tech companies. And we've seen it for the past few years, and it's not going to change over the next few years. I think that regulation, antitrust issues, the power that these companies have accrued will continue to be a political sort of talking point. As it pertains to Facebook, which, as we've said before, it is a company that we own a position in our core fund. I don't think it really matters for the stock. I think it's mostly noise. We actually did the math on a potential breakup about 8 or 9 months ago. We haven't refreshed it, but what the math told us then was that there could even be a 10% tailwind if you separated Instagram out, right, from the core Facebook product. Where, I mean, I'll go back to price and say that's a demand on future performance, like we've said. So theoretically, there shouldn't really be any difference. But when the market thinks in things like multiples, if the market were to give Instagram a multiple closer to something like Snapchat, which it probably deserves, something even better than that because it's a better business, then I think that you could see the value of Instagram sort of unlocked in that sense. In a weird backward way, the government could help shareholders of Facebook.
Unfortunately, we love all the help we can get on that front, but we're probably not going to get it from the government because it's highly unlikely that any breakup actually happens, and it take a lot for that to happen. I feel comfortable knowing that they're going to continue to be part of the same Facebook umbrella here. Last topic I wanted to hit was just Apple, and the reporting here is the New York Post. Just want to keep everybody in context to where things are coming from here, but is suggesting that Major League Baseball could be doing a deal for Wednesday Night Baseball with Apple for original content. And when I heard this, I immediately thought about Amazon and what they're doing with Thursday Night Football, what they've done there. And separately, I wondered how many people actually watch Major League Baseball. It turns out MLB is the second most popular sport in the US. And there's different ways to try to figure out what's the gap between MLB and football, and kind of consider this is that NFL is probably somewhere between 50 and 100% more revenue than Major League Baseball, but Major League Baseball is a major contender, and NBA is probably just slightly behind that. But if you think about global sports, MLB is probably the second largest global sports, even ahead of some of these like Premier Leagues, for example. So MLB is a big deal. And I was thinking back to how many times there's been rumors for the last 10 plus years of Apple buying content companies, and them always wanting to procure things, whether it's products, whether it's a design as software, or the content in Apple TV Plus themselves. And always felt like it would be unlikely that they would go out and just make a content acquisition for that matter. But for me, from my perspective, this makes a ton of sense. I think it gets them into live sports. As I mentioned, MLB is a formidable product. A lot of people love it, and I think they could do it in a really elegant way with a Wednesday night. And I think it really lines up well with some of the demographics that MLB has. And so I hope it happens. I don't have any insight beyond what was reported out there, and I just think it's one of these continued steps forward for Apple TV Plus if they do get into live sports. I took last word yesterday on Apple. I'm going to give you last word today on Apple.
Nothing major to add other than I think this would be a really smart use of cash on Apple's balance sheet to really make a statement in sports and invest in the product. I think Amazon spent about $1 billion on the rights for that Thursday night NFL game.
So it's a big investment. It's probably going to be.
I think you're right.
Yeah.
Yeah, probably. Yeah. I mean, there's obviously more games, but I think you're probably right. But I think it would be a worthwhile investment. And, for Apple, the great thing is, even if it doesn't work out, it's sort of a drop in the pan in terms of the type of cash that they generate on an annual basis. It's worth the risk just to see if they can build on some of the success they've had so far with Apple TV Plus.
Pop quiz. How many games are there in an NFL regular season?
Well, it just changed. I think now the teams play 17, not 16.
17. And how many games in a Major League Baseball season?
162, I think. I don't think that's changed since I was a kid.
I think that's right. Sometimes I think 163. I don't know where that comes from. I don't know what Loup TV episode we're on. It's probably starting to get closer to that. On behalf of Doug, Gene, and Loup TV, bye for now.